This is your pre-market update. Based on the latest technical and trade signals, the market score stands at 51.06, firmly in the neutral hold zone. That means we're now in a stage where investors should focus on rebalancing and managing exposure rather than chasing short-term rallies. Let's break it down. Yesterday, the S&P 500 rose 0.23%, Nasdaq 100 gained 0.74%, while the Russell 2000 slipped 0.55%. The divergence highlights a familiar theme: large-cap tech dominance amid ongoing weakness in smaller caps. NVIDIA once again led the market after strong, high-related demand and optimism from its GTC conference, reinforcing the idea that AI remains the core driver of this bull phase. On the macro front, sentiment improved as the Fed's rate cut expectations strengthened, and some policymakers hinted at a possible early end to Q2. At the same time, Trump and Xi Jinping's planned summit this Thursday added diplomatic optimism to the mix, easing trade tension fears. In key indicators, the 10-year yield slightly eased to 3.978%. The dollar index dipped to 98.72, while gold and oil prices both slipped modestly, reflecting a mild risk-on mood. From a valuation standpoint, the S&P 500 TTMP, at 31.97, remains elevated, supporting the idea that the rally is now driven more by liquidity and momentum than by fundamental undervaluation. Meanwhile, the Fear and Greed Index at 39 suggests lingering caution, aligning with the mixed tone in market breadth. Experts from eToro, Wells Fargo, and Ameriprise maintain that the AI theme remains resilient, but strategists like Montgomery Scott warn that markets are entering a short-term overbought zone, with potential for a 5-10 pullback before year-end. From a technical perspective, this means holding or trimming profits on extended tech names while keeping dry powder for opportunities if the FOMC triggers volatility. With the Fed's decision and Powell's press conference coming up tonight, the next 24 hours could set the tone for November's market direction. Always remember, investing involves risks. You are responsible for your own investment decisions. You've been watching Wall Street Brief. See you next time.